Welcome to another video, guys. In this particular lecture we are going to talk about daily trading levels, and by the end of this session you guys will be able to identify your entry point and your exit point of your trade. So let's take a look at the session outline. First thing first, guys, in order to recall what is technical analysis, we will speak about a really quick definition of what is technical analysis and how it works for us. Then we are going to talk about what are trading levels. Then we are going to talk about how to identify the pivot point levels, and definitely we will also speak about what is pivot point and how to use these pivot point levels. Besides that, we are going to talk about identifying the selling and buying level. Guys, in the forex trading, the difference between amateur forex trader and professional forex trader is that the professional traders now their entry and exit point, like they do have a plan. So by the end of this session, I will be making sure that you will be able to understand. You should be able to answer yourself why you are taking this particular trade and what is the logic behind your trade. Guys, in this forex market, most of the people lose money because they are trading for the sake of trading. Like, they are not trading because there is any trade. However, they are just trading because they got money in their account and they probably have not traded in the whole day. So in order to like trade just for the sake of trading, they enter their positions, and if we ask them like why you are entering a buy position in euro US dollar, there is not going to be any answer. So if you believe and if you want to make a differentiation between whether you are a luck based trader or whether you are a skill based trader, you need to ask yourself a question before entering every position, each and every position. And the question here is why you need to enter this particular position, why you need to enter this particular trade. And if you successfully answered yourself, like maybe I'm entering this position because the euro is very strong, maybe because the ECB is going to make euro stronger, or maybe there is a violation of a resistance level and now market is likely to go after another resistance level. So yeah, you are trading based upon your skills but not based upon your luck. So your luck is going to be with you. Like, you only have to be, I normally say that you only have to be unlucky for 2 times or 3 times, like, to make sure that you are losing enough. However, you have to totally depend upon your skills, because luck is not going to be with you each and every time. So whenever you have skills and you are entering your position based upon skills, you will be feeling like your luck is working 100 at the 100% level. So having said that, let's move on towards our first slide. Alright, speaking about the importance of this particular session, which is called trading levels. Guys, all we need in the forex market to be a successful forex trader, I need to be able to identify the entry point, I need to be able to identify the exit point, I need to know when market is going to take a reversal, or I need to know what is the overall trend of the market. And this is what we will be doing in this particular session. And by the end of this lecture, you guys will be, as we speak earlier, you guys will be able to take the trades, like you will be able to understand where you need to enter in the market and where you need to exit from the market. So speaking about what are the trading levels, guys, I often say that market never moves in the directly upward. Like, let's suppose if there's a bullish trend in the GBP USD, this is not going to happen that the GBP USD prices will soar upward, like that will jump from here to here, like in the very directly. No, this is not going to happen. However, this is how market actually moves. Market moves in the cycles, and what is it? Market goes upward, falls down, goes upward, and this particular thing here is one cycle. Then the second cycle starts from here to here. So market always moves in cycles. So we can say that This is one of the reason we can make money in the forex market. So market always moves in the cycle. Market never goes never goes straight away, and the market return from a certain level. And all we need to do is we need to identify this particular certain level. Like let's suppose that market is there is a bullish trend in GBP USD. Prices were trading somewhere like here, and now the prices has come here. I am regretting myself because I was not able to capture this particular movement, but this is not going to happen. Like market will start going upward, like market will continuously go upward. However, there is going to be a drop in the market, and that is the point where I need to identify this particular trading level where market is likely to drop. So I will probably will take a sell position, or maybe I need to identify this particular level, which is when the market is falling down. So as soon as I identify this particular level, it means that I can take a buy position from here, and I can ride the trend once again, even though I was not able to ride this particular trend. But now, because I was able to identify this particular drop down in the market, and I was able to identify this particular trading level, I entered the market, and I was able to capture this particular movement. So that is what I will be that is what we will be doing in this particular session, and that is what like we are going to help from the we are going to get help from the trading levels. So what are these trading levels? First of all, guys, these trading levels are called the support and resistance. Let's take a look like what is support and what is the resistance, if you guys are wondering what is it. The support is a level where market can bounce back after testing the support level. Let's suppose, guys, I normally give an example like we got a floor, we got a roof, like we got the upper wall, we got the lower wall. So this is how market is likely to move. Market tests the upper wall, and then falls down. Market falls down, so get a support on the lower wall here. It will be called support, and then market will bounce back upward. As soon as market is bouncing back, that was a level which is the upper wall, which is called resistance. Actually, market will drop down from here and here. So this is what we say, like this is a support level, and this one is the support level and one is the resistance level. So let's do this in this way. That is support and that is resistance, and this is how market actually moves. Resistance, support. Market will initially go upward and will test the resistance, and then will fall down, and then will test the support and will give us a pullback. So this particular level from where market is getting a pullback, this is a low level, this is called support. And on the other hand, the market falls down after testing the resistance. So the upper wall from where market is likely to drop down is called the I say that like there is, let's suppose if you guys ask me like, really, what do you think about what is going to happen next with the gold, and I will be saying like, okay, there is going to be a bullish trend in the gold, and the gold prices may go upward. I really don't mean that there is going to be a bullish trend and gold is likely to initiate buying from, like, let's suppose 1200 level, and it is going to continue for 2000 and 3000 level. No, this is not what I meant. So there is going to be, the second questions need to be what is the resistance for gold. Like, let's suppose if I say that gold is likely to stay bullish above 1200 here. So the second question that you need to ask me, or you need to ask any analyst, is that from where market can reverse back, or what is the resistance level for the gold. So that is the resistance level. It means that on the resistance level, either you can take a sell position or you can close your buy position. So that is how the support and resistance level works. And now let's take a look like at our chart to have a graphical representation of them. For example, guys, if you can see here, market fell down, and then market bounced back upward. Market again fell down, and then market took another bounce back. Like from here, market fell back, and then another bounce back. So this particular level seems to provide a support to the GBP US dollar. And likewise, if you take a look here, market fell down, and then market took upward. So this was again was a support level, where market was gaining a support. This was another support level. So this is how you can let's suppose if you was able to identify this support level before here, and you should have been able to take a buy position here. And if you take a buy position here, you can see market move from this particular level, which is 1.30 to 1.32, which means that market traveled almost 120 pips, 150 pips, which is quite a lot. So this is how support and resistance can provide you pretty nice trade opportunities. Here is another example, guys. You can see here that market fell down. Where it fell down, market gained of support, and then again market took a slight retracement, and then market fell down, and then again market is facing another support level here. So as we know that market is having a support level here, let's suppose if I already knew that 1.3240 is a nice support level, I should have been taking the buying position here, and I should have made some nice profits. And the idea behind today's webinar is we are going to learn about these support and resistance levels. And yeah, so what these trading levels are called, guys? These trading levels are called the support and resistance. It shows us, first of all, the point of reversal in the market. It also helps us identifying the entry point, exit point, take profit, and stop loss. So definitely, guys, if we are like if I am entering my buy position above support level, so definitely my take profit is going to be on the resistance level, which means that these particular support and resistance levels are giving me my entry price, and they are also giving me my exit price, which is on the resistance exit price. Right, so that's all we need to know before entering a position. So probably this is going to help you about your trading, like it is going to improve your trading skills. By the way, guys, these trading levels are called pivot points in the market. Let me tell you what pivot point actually is. First of all, the pivot points are the technical analysis tools. And then these are the most widely used concept in the forex market, not only in the forex market but also in the commodities and the stock market. And everyone, guys, everyone in the financial market, everyone has their own way of calculating the support and resistance. Some do so with the help of price action. We will be conducting another lecture on the chart patterns, where we will be speaking about the double top pattern, the triple top pattern, and this is also very helpful in identification of the support and resistance. But let's suppose if you are really new in the forex market and you want to trade, you want to be able to know what to do, like where to trade, where to take the buy position, when to take a sell position. This is a very nice trading strategy. Guys, let me explain what is pivot point. Giving you a real-time example, guys. When I wake up in the morning and I have no idea what's going on in the market, and if I have to take a position, definitely I will not be able to do so. I need some help. Like let's suppose, isn't it going to be very nice opportunity? Like let's suppose if someone tell me that, Haley, if the prices are trading above 1300, you need to took a buy position, and if the prices are trading below 1300, like gold prices are trading below 1300, you should stay in the selling position. That is going to be one of the very nice like an efficient trading level for me. Like it is just like a piece of cake for me. For example, that I wake up in the morning, I spot the pivot point, and the pivot point says that the pivot point is 1300, which is by the way, guys, this is a midpoint to start your trading. So it's a midpoint. It means that as soon as I identify the pivot point says if the current market price, CMP, which is called current market price, is trading above 1300, then the trend of the market is very likely to stay bullish. So you should be looking for the buying entries above 1300. However, if the current market price is trading below 1300, you should stay in selling, because there is very nice probability that there is going to be a sell opportunity in the market, or if the prices are above current market price, there can be a bullish opportunity in the market. So pivot point is a very nice strategy that gives you the midpoint every day in the morning. So all you need to do is you need to calculate the pivot point on your own. Secondly, we can also like call them as a support and resistance. This support is once again a trading level where bearish trend is likely to end. For example, we can say like this. This is a support level, this is a resistance level, and if the market is trading like this, market falls down, this is a level from where market can stop its selling trend, and here market can take a pullback, and on the upper side this is a level where bullish trend is likely to end. So this should be called resistance. Guys, once the resistance is broken, violated, market will go for the second resistance, which is R2. So that is what we are going to we are going to calculate right now. So the forex support and resistance plus pivot point. Okay guys, as we know what is support. Support is where bearish trend is likely to end. Support will be like here we will be learning to calculate the three supports at the same time, and the pivot point basically indicates where you need to start your trading. It also tells us about the market reversal and the market trend. If the prices definitely are above pivot point, this means the trend is bullish. If the prices of any trading instruments are trading below pivot point, means then trend is bearish, and we should be looking for the selling opportunity. That's right. So speaking about the resistance, we already spoke about it. It's a level from where market is likely to end the bullish trend, and we will be learning to calculate the three resistance in order to make sure that even if market is very much volatile, we are not missing anything. We will be having a more grip on the market. So guys, speaking about how pivot point works, let's suppose I just wake up in the morning and I see that I will be calculating the pivot point, and this is my pivot point, for example. Here we go, just a moment. Alright, this is my pivot point. Okay, what I need to do here is I need to wait for the market, and I need to make sure that the market is consistently trading above this. However, if market violates this particular level on the lower side, I will be looking for a sell position. Let's do this. Let's see what happens in the market. All right, here we go guys. If you look at the next slide, you can find it here, like there has been a market fell down, market violated the pivot point level, and then this is a level from where we should be selling in the GBP USD, and GBP USD took a bearish reversal here. So as soon as market violates the pivot point, there is going to be a selling trend. As soon as the market violates the pivot point from the downside to the upside, there is going to be a bullish entry in the market. Let's take another example. So alright guys, as soon as market violates the pivot point and I enter a buy position or a sell position, like in this particular case I will be entering a sell position like here. So where I need to close my position. So in order to identify my target points, what I need to do is I need to calculate the S1, I need to calculate the support 2. So I will be calculating 3 supports at the same time and 3 resistances at the same time, in order to make sure that if I'm entering a buy position, where I am supposed to set my take profit, which is on the R1, which is the resistance 1. And then where if R1 is violated, where I'm going to I'm supposed to go to the R2, which is the second resistance. If the R2 is violated, then I will be looking after to the R3. So that's what we need to identify, and that is where I will be setting my take profit or this stop loss. So for example here, if I take a sell position below somewhere like here, where is going to be my take profit? On the first S1 or on the second S2, so or the third S support level. So for now you can see here the market closed the position at the first support level and then took a reversal and fell down, but it again bounce back to test the pivot point level. So probably from here market should go to downward once again. So this is how we can trade the support and resistance, and that is how we can calculate the pivot point. So here's a formula for calculating the pivot point, guys. This is not a very complicated thing. It is as simple as that. All I need to do is I need to take a high position, I need to take a slow position and a close position for the past day. Like let's suppose if I am calculating the support and resistance for or maybe pivot point for the gold on the daily basis, I will be looking at like today, like let's suppose today is Monday, and then I will be looking at the closing price of Friday. So I will be taking the closing price. I will be taking what was the high price for gold on Friday, what was the low price for the gold on Friday. So let's suppose I get 1300 plus 1310 was the high level, that was a low level, and that was a high level, and the closing was somewhere else 1315. I will plus them, add them, and I will divide them with 3, which is the average of them. So let's see what we got here. Let me open my calculator, just a moment. Alright, so on the calculator, 1300 plus 1310 plus 1305 divided by 3, which is 1305. So guys, 1305 should be my take profit, should be my pivot point. It means that if the market is trading above 1305, I will be looking for this buy position, or if the market is trading below 1305, it means that I will be looking for the selling position. Likewise, there is a guys, you can take a screenshot for or you can also make an Excel sheet, and you can set the formulas, and all you need to do is you need to put the high price, low price, or closing price on the daily basis. All you need to do is you have to update your sheet, and you will be getting the R1, R2, and R3 on the daily basis. You will have everything ready in front of you. So yeah, in order to calculate the resistance one, you need to multiply the pivot point with 2, and then minus the low price from the previous day. Let's do this. Let me open my MT4, and let's try to do some experiment. Alright guys, this is my MT4, and it's a live chart of GBP USD, and these are the live prices. So what I will be doing here is if I want to identify what is likely to happen today and whether I need to stay bullish or bearish today, what I will be doing is I will be looking for the high, low, and closing prices for this particular candle. And in order to do so, as soon as I move my cursor here on this previous candle, you will be able to find the high, low, and closing price somewhere like here. Let me highlight this portion. All you need to do is you need to focus on this particular area. Let me highlight it for you. This particular area, you will find the prices here. All right, so here you can see that the high price is 1.3398, the low price is 1.3294, and the closing price is 1.3314. So in order to calculate the pivot point, I need to open my calculator. Here we go. I'm going to place the high price first of all, 1.3398 plus 1.3294 plus 1.3313, and I will be dividing it by 3 in order to calculate the pivot point. And then I will be taking I will be drawing a horizontal line and putting the same figure which I calculated right now. Just simply copy and paste it here, and here we go. Alright, so I'm going to the lower chart, like lower time frame chart. So guys, this is the pivot point. It means that I need to stay bullish above it. Like if the market are trading below this level, there is likely to be a selling opportunity, and above this market can go further higher. So if you can see here, today market like violated this particular level here, and then there was a upward movement in the market, and the upward movement was about 56 pips, and then when market fell back, where market fell back, to pivot point, and market gave another opportunity to investors to take a buy position. So it means that it is pretty clear that on the above the pivot point, market is likely to get us some nice buying opportunities. However, below the pivot point, market is likely to get us some nice selling opportunities. That is not the end here. Let's take a look some other currency pairs, so how these are behaving. That's the Euro USD chart, and I wanted to know whether I need to stay bullish about on it or whether I need to stay bearish. However, the market was sideways today, but let's take a look. So that is the previous candle, that is today's candle. So I will be looking up to the previous candle. So let's do this. I'm moving my cursor here, and here you can find the high, low, and previous prices, like closing prices. So high price was 1.1744 plus 1.1655 plus 1.1698. all right, so I'm dividing it with 3. Enter. So this is my pivot point. Right click, paste this particular price and make it a bit thicker. All right, so here we go. When the market was trading all right, so earlier market was trading below this particular level, like here. Today is 5th of the month. So for example, here market was trading yeah, that's 5th of the month, and you can see here that the prices were trading above. First of all, here prices were trading above pivot point, and then there was a downward violation, of the pivot point, and then as soon as market fell down, there was a sharp selling in the market. Market has a breakout here, like a violation of the pivot point here, and then there is a huge sell-off in the market. And as soon as market pulled back for some reason, definitely for fundamental reasons, as soon as market violated this particular pivot point, there is another bullish trend in the market. So let's see how many pips you were supposed to. Again, let's say you enter the sell position here. From here to here, market moved around 46 pips, whereas above this market moved around 30 pips. So it means that it was supposed to offer us some nice trade opportunity up to 70 pips. So that is how we can calculate and we can trade the pivot points. So guys, the idea behind trading these events are that we are supposed to identify the pivot point, and then we are supposed to take a buy or sell position. So let's move back to our slides. So looking at the slides, you can see here that the resistance level, guys, one thing that I want you to know is the resistance level. As soon as the resistance level is violated, first of all, definitely we are supposed to take a sell position below resistance level. But as soon as the resistance level is violated, the same resistance is likely to work as the support level. So as soon as the first resistance is violated, the market will go for the second resistance. So having said that, just keep in mind the rule. The rule is that as soon as the support is violated, it is likely to work as a resistance. Let me show you how it works actually. For example, that is a support level, that is a resistance level, and the market fell down, took a support, bounced back upward, and manages to violate this particular resistance level. Then market is likely to go after another resistance level. So what we can say here is, this resistance level, which is now violated here, when market goes after to the R2, this particular R1 is likely to work as a support level. So it means that as soon as market violates this level, market will fall down and is very likely to gain a support here, and then again give us a pullback. So if you guys miss an opportunity, like if you guys have a breakout in the resistance, never jump in the running trend. Just wait for a slight retracement, and then we are good to take a buy position. Alright, so how to trade the pivot points? Guys, here are some rules that you need to keep in mind. The number one rule is that we only take a buy position above pivot point. Like this is a pivot point, and if the market is trading up in the pivot point, I will be only taking a buy position. However, if the market price is below pivot point, I will only be taking a sell position, and only buy above support level. If there is a support and the prices are moving like here, market is trading like here above the support level, I will never be taking a sell position until and unless market is violating the support level and making it a resistance level. So it means that, guys, the very first rule here is you only have to take a buy position when the market is above pivot point, and you only have to take a sell position when the market is trading below pivot point, because the chances are very nice that the prices will fall down. So you only take a buy position when the market price is above support level. Guys, this is a support level, and you are only supposed to take a buy position right here. So this is a support level. You are not supposed to take a sell position above support, because market is likely to gain support and give us a pullback, and you are only supposed to take a sell position below our resistance level. So you simply cannot take a sell position above resistance. You are only supposed to take a sell position when the market is below resistance. So the chances of your success will be higher. So never sell above support, and never buy below resistance. So yeah, that's the same rule, almost this one. They both are interrelated. So that's a rule. That's the rule. So that is how we can trade the resistance level. For example, if you take a look here, that was the resistance level. Sell below resistance. When you take a sell position, pretty nice, you were able to capture some nice amount of pips. However, as soon as market violates the resistance level, this resistance level is likely to work as a support level. So you can take a buy position somewhere like here, and then you can place a stop loss here, and you can take the set profit at the next resistance level. So this is how we can trade the resistance, and this is how you can trade the support. When market is above support level, you are only supposed to take a buy position, because if you take a buy position, the chances are pretty nice that you will be making some really nice profits. And that's pretty much it. Summing up, that all you need to do in the morning is you need to identify the pivot point. You need to buy above or sell below the pivot point. You need to buy above the support. You need to sell below the resistance, and close your buying position at resistance level, and close your sell position at the support level. So that is your entry price. You are supposed to close your buying position at the resistance level, and let's say this is your entry price, which is it was the resistance, which was your entry price, and you are in a sell position. So you are supposed to close your sell position as soon as market tests the support level. So close your sell position at the support. Alright, so that's pretty much it for now, and thank you so much for joining us, and see you next time.